speculative frothiness thrown in for the likes of AI and crypto and things that I think still have yet to be proven.
Well, it's happening at a weird time because it's syncing up with the presidential election year. And I saw Goolsbee being from the Fed being interviewed today on the news, and they said, "Are you really going to start cutting interest rates and playing with that stuff in an election year this close to the election?" I mean, we've in our lifetimes we've seen one incumbent president basically taken out by a slumping economy, and that was the older Bush. Uh,
Right.
could it happen this year? Hi, everyone, and welcome to the Silicon Sider podcast. Hi, Scott. How are you? I'm a
I'm
little,
well, Michael. How are you?
yeah, I'm
Hopefully
a
you're
little razzled up here because of all the stuff that's been going on this week.
going to say you've got to watch the blood pressure if you're playing the market. My goodness.
Yeah, gee, anything important happened this week?
Nothing you should pay attention to day by day. That's what the
Day by day.
long plan would say.
Um, okay, so last Friday, let's go back and look at everything that's happened in the last week. Last Friday, everyone was talking about the people switching out of their high tech stocks, mainly AI stocks, getting into more traditional businesses and rotating out. And that might be the end of the of the uh, AI bubble. Okay. Then the jobs report came out, only 114,000 new jobs. Everybody seemed to panic. And then apparently on the other side of the world, Japanese banks were looking at what was going on here and saying, we are really overexposed from a year of buying junk bonds in the US. We've got to start reducing risk. And that's when all hell broke loose. And the stock market started to fall. Everyone waited all last weekend to watch in the market to see what the futures was going to look like. And by Sunday night, it was getting scary. And then Monday, all hell broke loose. I mean, the Magnificent Seven, of course, went down, but all tech stocks went down, and even traditional equities, standard traditional businesses collapsed as well. The Nasdaq fell, I believe, over 1,000 points at one point, which was a record. We saw the Dow and we saw the S&P fall commensurately, and it looked like we had just tumbled into a recession. And the next couple of days were almost as volatile. And then now, as we're talking, the market's coming back up. It had a great couple of days. Uh, all the exchanges are up multiple hundreds of points, and they've regained almost everything that was lost. What was that all about? I
Well,
mean,
as you know, I take a longer term approach, I think, on this. And so I don't think we nearly tumbled into a recession. I think we took a step in that direction. And there were several factors. There was Japan, like you said. There was the rotation out of AI stocks that we had already seen. I think, just adding to the sort of kindling, Warren Buffett selling a bunch of Apple scared a lot of investors. Like if Warren Buffett is into cash instead of stocks, whoa, what does that mean for the stock market? But if you took a step back, Apple was and is still Buffett's largest holding. AI stocks are still, X10 or whatever what they were even a year ago. I mean, people freaked out that Nvidia was below $100 briefly, but this is a stock that was at $1,000 or $1,200 before a 10-for-1 split. There were a lot of shares out there that were pure profit for employees and other investors, even in the short term, not to mention the long term. So these things do tend to jump on each other. And so you say a few days ago, did the Dow deserve to fall that far, nearly 1,000, more than 1,000 points? I don't know. Did it deserve on the following Thursday to jump nearly 700? Again, I don't know. We are in a very volatile phase up and down where even the hint of a future recession causes panic. And then even a hint of, hey, maybe we'll get an interest rate cut soon, causes a whole lot of buying. And,
right.
it's just sort of the masses following other people into and out of the market at the same time.
And risk takers with a certain amount of liquidity, this was a great buying opportunity this week. You're going to be able to get Nvidia for under $100 a share briefly.
Right. Bitcoin was briefly under 50,000, but even 4 or 5 days later, it was back up nearly to 60. These are very volatile, should I say, currencies, very volatile investments, whether Nvidia or Bitcoin or anything like that. But, again, if you look at any sort of timeline for a stock like Nvidia, you don't even have to go back years. I mean, just even months. This is something that has grown so quickly that it makes sense for people to take profits. Now, people get greedy and they think the good times are going to roll. And so when even something out of the ordinary happens, a big loss in Japan, Warren Buffett moving into cash, something will say, uh-oh, this is the trigger, and they'll sell big time. But these are still solid companies, and I think it's still a solid overall economy. But look, we haven't had a downturn that's lasted for any length of time in a long time.
Yeah, well, usually I'm the Cassandra and you're the optimist. You seem to be hedging that a little bit. And
No, I
I
am.
have to say that, the indices are still all over the place. I mean, consumer confidence is in the toilet. There's some other, you look at some of the charts and it sort of resembles not 2008, but 2017. I mean, that a lot of the overall indicators are kind of plateauing, and the curve is starting to take the shape of traditional recessions, but not necessarily big ones. They can be
Right.
ones in the mid 270s where we forestalled a major downturn and we managed to get through it without too much damage.
Right. And you think about the recent downturns that have lasted a while, whether 2020 because of the lockdown, during the early days of the pandemic, or going back to 2008, 2009. These were long lasting, very scary times. And now you're having these days where the Dow falls the most in, 5 years, or, the S&P biggest gain in 2.5 years. So you're seeing the volatility move in,
Yeah.
but we really haven't seen any long-term direction other than up in about 4 years. And that has made for a long bull run because our economy has been strong with some, speculative frothiness thrown in for the likes of AI and crypto and things that I think still have yet to be proven.
Well, it's happening at a weird time because it's syncing up with the presidential election year. And I saw Goolsbee being from the Fed being interviewed today on the news, and they said, "Are you really going to start cutting interest rates and playing with that stuff in an election year this close to the election?" I mean, we've in our lifetimes we've seen one incumbent president basically taken out by a slumping economy, and that was the older Bush. Uh,
Right.
could it happen this year? I mean, we literally can't predict the future, but it's so volatile it could go either way and conceivably decide the election.
Right. You saw a lot of people on Twitter the day that the market tanked like 1,100 points
Yeah,
saying, hey, look at your 401k. This is because of Biden and Harris.
yeah,
And I felt compelled to push back, not to defend Biden and Harris, but to defend the 401k. If you look at your 401k over the last 3 years, even a conservative 401k tied to the S&P 500, I'm not talking about sexy tech stocks or anything like that. I'm talking about a boring 401k, probably jumped close to 40% in 3 or 4 years, even
yeah.
counting the downturn. So that tells me anyone politically, whether the Democrats or Republicans, trying to either claim victory or throw blame for one day, that's just politics. That's not economics, and it's not good financial management, which has always been long-term financial management.
Yeah, but we have no memory. It's
True.
what have you done lately? And what have you done for me today? And you got to wonder, first Tuesday in November, are people going to be saying, well, where do things stand at this very moment? I don't care what happened the last 2 years. Right now,
Right. You're right. I wouldn't be surprised by that. You can see some rallies in the last few days where each side is going to take credit or throw blame based on how the stock market, which has been volatile lately, does literally that day. But, you know, that's a crazy way to vote because that's just one day. And, the long term policy, some people favor one candidate over another. And they rarely say, well, because he or she did this yesterday. They would say, because he or she is going to do this for me and my family over the long term.
right. Okay, let's talk about the Fed just for a moment. As you know, I mean, we've talked about this. There's been enormous pressure on the Fed to cut interest and talk of 25 points, doing it 2 or 3 times. And then as this market thing blew up, all of a sudden there were calls to don't wait till September, do it this afternoon and have an emergency meeting of the Federal Reserve and start cutting, cutting, cutting. Well, apparently, with the boom later this week, they're all backing off on that notion. But there's still talk of cutting rates by perhaps 50 points in September. Big jump. What do you
Right.
think? Are you seeing any smoke signals on this?
Not so much smoke signals. The Fed, as you know, plays really close to the vest. But part of the reason I think that stocks have gone up strongly is not just a bounce from the sell off, but even on a day like take Thursday, stock market up nearly 700 points on the Dow. Well, where did that run come from? Well, the jobless numbers were lower than expected. So we're seeing some economic strength even as inflation is coming down. But spending is still there. We see a lot of credit card debt. In other words, there are signals that even consumers are pushing the Fed towards an interest rate cut, saying we want to A, keep our jobs, and B, be able to shop at the levels and for the prices that we saw, a couple of years ago before the interest rates really started to go up. And so I think people are saying, the economy is strong, but slowly growing and only slowly growing. It isn't that what the Fed wanted in the first place. So
Right.
I think the Fed is starting to see the results of what it started to do a long time ago. And I think people on Wall Street are seeing that they're now, as you said, starting to expect an interest rate cut very soon. And so, bam, stocks go up. Remember, September is just a few weeks away at this point.
I know, I know. Um, I've seen some interesting arguments that we place too much hope in the Fed affecting the economy that much. That if you look at past booms and downturns, the Fed's actions have not really bent the curve very much. We think of it as they can just sort of, with a magic wand, turn the economy around. But in fact, they're usually too little, too late, and it doesn't matter anyway.
Right. It's interesting that we've seen the Fed cut rates by quite a bit over the last few years, over the last decade. We had 2008. Obviously, 9/11 wasn't that long ago. We've had, the pandemic, all these reasons to cut rates and sort of stimulate the economy. But think about how old you have to be to remember the interest rates being sent higher to
Yeah,
slow the economy. I believe the last time that happened in any substantial way was during the Reagan administration.
right.
And so to be an adult or even, and I wasn't an adult then, but I was certainly alive. Now you've got to be Gen X pretty much, right? So
Yeah,
if you take anyone younger than Gen X, and there are a whole lot, that means a whole lot of people, they don't really remember interest rates being raised, excuse me, yeah, being raised all that much because of inflation, and they don't remember inflation. Now we're all living through that. People are impatient about it. They're wondering, whoa, look at mortgage rates, look at the rate on my credit card debt, even my
yeah.
student loan debt. And that's something that has understandably freaked a lot of people out because, like I said, you've got to be a certain age to even remember this as a young person.
Right. But I don't think there's a miracle. There's not a miracle cure, which I think a lot of people who are impatient for something think that it can be done that way. And it may just be, I mean, sometimes you just have to shake inflation out of an economy over a course of years.
Right, because what are people our age telling young people about the Reagan years and inflation? Okay, we got out of inflation, but at what cost?
Yeah,
Remember
that
that.
was, I mean, Reagan basically said, pull the string and let's start collapsing the economy to shake out inflation. It was
Right,
not a fun time. I mean, he gets credit post facto, but when you were in the middle of it, it was nasty and he was getting blamed.
right.
Okay, so I got a quick one here. Oh, also, as long as we do more economics for these days right there than technology, but mortgage rates have dropped to the lowest level in a year, 6.47%. That's a interesting piece of news. It makes houses a little more affordable. I mean, we saw it way up higher than that, and it's coming down. It seems like it's going to keep coming too.
Um, yeah, with an interest rate cut likely comes a drop in the mortgage rate. We have seen that, and that is relief to, I think, many people who have been sitting on the sidelines. On the other hand, out here in Silicon Valley, prices are still so high
Yeah.
that it's still very expensive to do this per month with that mortgage rate. But that's one of the things that I think people are looking forward to is a drop in mortgage rates as the interest rates come down, as the economy slows and cools. And I don't know how low it will get. Remember, it got really low because we needed to boost the economy.
Right.
And now you've got this red hot housing market, a hot job market. I don't know that rates will drop all that low. It may be a long, long time before we get to that 3% level again for mortgage rates.
Yeah, and certainly not to 1%.
Right.
Okay, Palantir, our favorite collection of secretive spooks. Uh, they just announced that they are teaming up with Microsoft to start delivering their services to classified networks in the U.S. Defense and Intelligence Agency. They called it this a first of a kind integrated suite of technology that will allow critical national security missions to, I love this techno word, operationalize. Uh, every time Palantir does something, you sort of get a dreadful feeling inside. Like, what does this actually mean? What is it portend in our lives? Because they're such a spooky place that they're so spooky they couldn't survive in Silicon Valley. They had to leave to take their business elsewhere. What do you think? I mean, Palantir's job is to take massive amounts of personal data from all of us and pour it in and collate it and manipulate it and then give it to the government, among
Right.
other things.
Yeah. I don't think they left Silicon Valley because of what they do. I think they left Silicon Valley because of the politics of those who run the company. Uh,
Well, the culture, let's just say there wasn't a good cultural fit between Palantir and Silicon Valley.
right. I'll give you that. Although they are sort of built for the AI, big data, go find everything and just sort of suck it all up kind of economy, right? That's what they do. They started humbly on the stock market. They're now at all-time highs. They've got a $65 billion market cap. The deal with Microsoft boosted that. But they're not very profitable. Their PE is something like 170. And so they are just barely profitable
They only
um,
turned profitable, what, two
recently.
years ago? Yeah.
Yeah. And yet you could say they're sort of built for what companies do now, which is absorb data by the ton. And ethically, you've got to, it's interesting. Like it used to be, you'd have a mutual fund, and if you were worried ethically about a Philip Morris or something, maybe a gun manufacturer. Now I think we're going to have to start thinking about what some of these data collecting companies do
Yeah.
with our private information. Mark Benioff wasn't joking when he called Meta the new, smoking, right? The new cigarette company. These data companies are, like you even say, spooky in some ways. We don't know what they're doing with our data. Palantir is a perfect example of that. The headline is, for the military, for weaponry. Like, what exactly does that mean with this secretive company? And yet, investors seem to like it.
Yeah, well, a suite of services, but when you get beyond that, it's no comment.
Right.
Yeah. Okay. NVIDIA. Let's talk about our old friend NVIDIA. You know, right before the stock market crash, there was this feeling that people were rotating out of these Magnificent Seven and especially AI stocks because the bubble was bursting. And obviously, it showed in the numbers, especially at NVIDIA. But in fact, if you look closely, I was just reading that Microsoft, Amazon, Alphabet, and Meta account for more than 40% of uh, NVIDIA's revenues. And yet they have all publicly stated they're not reducing their orders. That they're going to keep them up because they still feel this is the future and they need to have AI chips. So is this an overreaction on NVIDIA? The feeling like, oh, it's too big. The bubbles, the bloom is off AI, and NVIDIA is the poster child for AI. So it's time to get out of that business. Or in fact, what we're going to see is NVIDIA just keep growing and growing as these orders come in month after month from these giant corporations who are not backing off.
Well, that was the big question was, will AI prove itself enough that these big orders have to be ordered and then filled by NVIDIA? And there was some concern that led to the big sell-off. I think one of the factors that led to that was AI is overhyped. These companies aren't going to be profitable. This is another dot-com bust in the making. And then that statement that you just referred to came out, and NVIDIA stock soared again on the thought that, hey, they're still going to sell a lot of these powerful chips and they have a big lead. Although you also saw big gains for the likes of AMD. They make chips,
Mhm.
Applied Materials, the chip equipment maker. Look at Lam Research. Some of these companies have really been strong for a long time now on the back of the AI play. But what about OpenAI? Are they going to be profitable? What about Anthropic? And that's still a big question mark as companies try to figure out not only adjusting their staff sizes because of AI, but their, I think, earning potential because of AI. Even Apple is trying to figure out, does it charge people for these AI services? And if so, are we, the consumer, going to pay for them when ChatGPT has always been free? And frankly, I'm not really sure how helpful it's been to any of our lives and bottom lines. So these questions are still out there, and they're legitimate questions, and that's the risk you take right now as an NVIDIA shareholder. But again, I think part of the selling there was just because you're overwhelmed with shares. You have 10 times the shares at an incredible price. And why not just cash in? You've earned it. You've held this stock for a long time. Good for you. Go buy that car or house or whatever.
And Susie needs braces, and little Billy's got to go to college with
Right.
tuition.
And
Why don't we
yeah,
cash
exactly.
out a little bit? It can't stay this high forever.
Ah,
Okay,
yeah.
well, I gotta say, OpenAI increasingly strikes me as one of those companies that pioneers something. But as the big folks come in, and I'm talking about, the Apples and the Microsofts, at some point they just say, well, we don't need this little company anymore, that we can do it ourselves. We'll produce a proprietary version of ChatGPT. I mean, some are getting on the bandwagon with OpenAI, but it just looks like a company that's going to get crushed between giant millstones at a certain point, unless it really comes through with a monster killer app.
But isn't there also a scenario that no matter how successful or unsuccessful OpenAI gets, that Microsoft or Apple, which have both made investments into their technology,
Yep.
just buys it all up?
Oh
Um,
yeah, that too.
I don't think
I think that's actually the best scenario. I don't think they can ever become a giant public corporation.
you
And
never know, but Microsoft stands to either make a ton of money if OpenAI becomes a giant public corporation, or just sort of absorb its own interest and its own
yeah,
stake by buying it up. So either way, I don't think Satya Nadella at Microsoft is willing to let OpenAI just sort of wither on the vine. They have too much at stake.
no,
Reputation
I
and
don't think
financial.
that's going to occur, but I do think they're going to get bought. I mean, having been through the scenario of being bought and going public, being bought is a lot better for all the employees. because you get your money immediately. Going public, yeah, you get on the back end, you have a big chance, but lockout periods, vesting, during the dot-com bubble, a lot of people were sitting on a lot of money on companies that went public, and they thought, I've made it on easy street. And then by the time the vesting ended and the lockout period ended, the stock had already fallen. It crashed, and they ended up with nothing. Awful nice. Paying capital gains is painful, but I'd rather do that on money in my hand than betting on the stock staying up till I can actually sell it. So, I think the point I'm trying to make is inside of OpenAI, there might actually be pressure. Let's sell it now. Let's get our money out of this and give it to Microsoft
There
or
might
Apple.
be, but I think what would cause that pressure is something we don't know is what are the financial prospects here? OpenAI is starting its own search engine. Search is very profitable. Just ask Google or Microsoft, but AI has not been profitable. And
Right.
so you wonder about these startups, even as they get fat with investor and VC money, are they going to deliver on the back end? Or are they just going to go for plan B, which is sub plan B, which is either get bought or the other sub plan, which is go away. And I don't know which one happens, but you're right. Are these companies and is this industry going to become that big, or is it going to become something important to a lot of back ends,
Yeah.
companies that use AI, but is it really going to be the big revenue generator that some of these early bets are hoping for?
Yeah, and it's hard to tell right now because so many new technologies start out, they get the big push and the hype. They don't live up to the hype, and everybody kind of goes, "Oh, well, it didn't quite pan out." And then a few years later, it goes huge because they solve all the problems and all that, and you get enough adoption and everything else. Uh, so on the other hand, a lot of these things are hype and they just sort of fade away. And right now, we're kind of in the backlash phase that, well, AI isn't going to change the world tomorrow. We thought it was a month ago, but now, yeah, maybe not. It's still giving us weird results and all that. But one of these days, we're going to look up possibly and realize that it's interpenetrated every part of our lives and we're utterly dependent upon it.
And who has the patience to do that? The Apples and the Microsofts do.
Yes, the folks with deep pockets.
Exactly. Exactly.
So, okay, finally, the one company that's not benefiting from the AI revolution, Intel. Last Friday, Intel announced it was going to lay off 15,000 people. And the stock it dropped 26%. It fell from 41.80 to below $20. And all hell broke loose. Well, 17,000 jobs. It's 15% of Intel's workforce. And the company said it had to resize and it had to, refocus. And also that it suspended its dividend, which really ticked off shareholders. So now a Missouri pension fund is accusing Intel in a big class action suit of hiding information. The kind of thing that happens when your stock collapses. All right, so let's look at this whole thing. It all seems to be come from something or other. Uh, and then we discover that uh, who was it? The previous CEO of Intel. Who was it that at the time? Anyway, the guy before Pat Gelsinger. He had a chance to buy 15% of OpenAI in I think 2017, and he didn't take it. How different history would have been, and how different the story for Intel if he didn't see a lot of future for it, apparently. And now everything seems to have followed from that. Intel screwed up completely at the beginning of the century because everybody was in the chip business was moving into smartphones. And Intel, in its wisdom, decided to focus instead on networks. And they lost an entire generation of advantage because they were the world's leader. And then they fell behind. They've been chasing it ever since. And now we find out that they had a chance to be right there at the start of AI revolution, and they passed on it. It's like karma's coming home to them for making these dumb choices. And then to finish it all off, you have Pat Gelsinger adding a verse from Proverbs on his announcement of all this. Like he's now reduced to prayer at Intel, and it's let your eyes look ahead, fix your gaze directly before you, give careful thought to the paths of your feet, and be steadfast in all your ways. I think what Intel missed was give careful thought to the paths of your feet.
Yeah, and they're walking through the valley of the shadow of death, right? I mean, look, Intel is
Indeed.
an $87 billion company, Michael. That's shockingly low. That's
Yes.
just above a third of what AMD is. So you're
Yeah.
talking about names that you remember. You think of Sanders from AMD looking down and smiling right now. Bob Swan, by the way, is the name that nobody
Bob
remembers.
Swan, that's who it was.
That's the
Yeah.
guy who you were thinking of. Intel has passed on so many things. They haven't been relevant for so long. They're barely a third of the market cap of AMD, a fraction of the market cap of the much bigger companies, even in the chip and chip equipment world. They've just missed. Everything has been a swing and a miss. This latest example was just horrifying how many people were laid off in an otherwise strong economy.
Yeah.
And it's just what happens when a company is unable to be relevant, period.
And to think they're one third the size of AMD, a company that was created because Bob Noyce wanted to give a gift of second sourcing to Jerry Sanders at AMD,
Right.
kind of as a mercy thing to keep that company alive. And here it is. AMD is the winner in the race. And I don't know where Intel goes. How do you come back from this? You would have to hit the next big thing. They've already missed two big things. And the next big thing, when does it come along? 10 years from now? Will
Right.
Intel even exist in 10 years? My sense is, yeah, they got all that money from the feds to build fabs. Why don't they just give up on being, the leading designer of chips in the world? That fantasy's long gone. That title's long gone, and just become a fab maker, just become a chip builder, become another, you know, TSMC.
I mean, you often see companies that are this hit, this hammered, as they lay so many people off, do eventually sell off parts of the business and then just sort of have to restart. So we'll see. Who knows? But right, they haven't been relevant for a long time. Right smack in the middle of the center of the world's relevance, and they can't be part of it. It's too bad.
And about 2 blocks away from Nvidia.
Well, exactly.
They can get up on the roof and look over there and hear the cheering just on the other side of Lawrence Expressway. Okay, that's it for now, folks. You can find us on Spotify, Anchor, Google Podcasts, Apple Podcasts, and YouTube. You can see Scott on Facebook and X, and of course, every weeknight on NBC Bay Area, and hear me regularly on the BBC radio show Business Matters. Have a great weekend. We'll see you next week. I hope it's not quite as exciting as this week. Bye bye.